It's Friday, February 14th. It's time for Retail Now. Happy Valentine's Day. This week we've got January retail sales, a lot of payment news in the retail industry. Whole Foods lowers its forecast, Alibaba enters the U.S., and Home Depot invests in technology. All that and more on Retail Now. Well, happy Friday, everybody. Happy Valentine's Day. I'm Keith Anderson. This week I'm joined by Mary Sullivan. Hi, Mary.
Hello.
Good to see you, and a fresh face on Retail Now, but not new to R&G, Mike Rogosa.
Hi, Keith. Hi, Mary.
Mike, for those that may not be as familiar, tell us a little bit about your role at R&G
Sure.
and what you focus on.
Sure. So I head up our client services department here at RetailNow Group. I've been here for about 4 years, started off on the analyst side, very similar to where Keith and Mary sit today. And about a year ago, I transitioned, so now I really support our clients, making the most and helping them get the value out of the subscription they have to RetailNetGroup.com.
So Mike, let's talk about January retail sales. Difficult month for a lot of reasons. What are we hearing?
So retail sales were down in January 0.4%, largely due to the weather. And that's really a continuing trend that we've seen throughout this winter, which has been one of the harshest on record. Going back a number of years, there's been basically consensus that throughout the country, us here in the Northeast, we're used to getting these storms, but even the timing of these storms have been worse this year. Talking about this recent storm that hit just yesterday ahead of Valentine's Day, you have all the greeting cards, confection. It's impacting a lot of categories where traditionally you'd see retail sales bounce back in the next quarter when you get these type of storms. But the timing of some of these have been so severe that you may not see a lot of these sales recover in the next quarter that are based on some of these big holidays. And really in terms of the impact that it's had on the retailers, one of the consensus or some of the hypotheses is that it's hurt big box stores more. When weather really goes bad, you see people taking fewer trips to big boxes, really going for the more proximate locations. But if you look at the retailers that have released results, it's basically traffic has been down across the board, not just the big boxes, although they've been hurt a little bit more than the proximity guys. But Walgreens to a few of the other smaller players who have released results, they've seen traffic decline due to the weather as well.
It's the expectation that demand is just going to shift a little further ahead when the weather picks up?
For some of the items, yes, but that's what I was saying just a little bit ago in terms of the timing of some of these. You may not see retailers recover, the entirety of their sales that they're losing due to the weather.
Yeah. Do you get the sense that e-commerce benefits disproportionately? In other words, if I really need something and I was going to make a stock-up trip to the store, but I end up skipping the store, am I going to order more online?
It's tough with weather because you never know the timing of the storms. It's not as similar as ordering your dinner that night. If you can order items that you need immediately online, and as online gets closer to same day or next day, as that continues to expand, we expect weather to have more of an impact. But in terms of this most recent cycle, I don't think you've seen as much shifting to online as you might maybe a few months, a few years down the line when these continue to roll out and build out.
Yeah, fair enough. So the second big theme this week is payments, and payments have been a hot topic in retailing for a long time. I was at the Money 2020 conference 3 or 4 months ago, and it's a brand new conference, and it was huge. I mean, truly, I don't recall speaking at an event with as many retailers, technology companies, and manufacturers that emerged out of nowhere in a long time. But payments have been on the radar in retail for a long time also, and there's not been a lot of movement. You've got all these competing technologies from Google Wallet, PayPal. We spend a lot of time in the venture world, and there's literally close to 100 competing payment technology companies. But I think, candidly, triggered by some of the recent security breaches, there's been a really rapid rise in interest to find a solution. So one of the first things that we saw this week was that a huge group of industry associations and organizations, led by the RILA, but including the NRF, National Grocers Association, and close to a dozen other associations and consortiums, has gotten together and is forming an alliance around trying to accelerate a solution through chip and pin or some other more secure technology. So I suspect there's going to be an acceleration given the urgency of solving this problem to prevent future issues like that. But two other big stories this week. Whole Foods picked Square, which is a payment solution provider that Starbucks invested $25 million in, and that primarily works with a lot of independents. So despite that $25 million investment from Starbucks, Starbucks doesn't actually use their technology in any scalable way, but Square landed Whole Foods as their first national retail chain. And it sounds like they're going to be installing the Square technology to basically accelerate the checkout process at different points around the Whole Foods store.
Right.
So,
I think that's an important one. Is that this isn't going into their normal checkout lanes. It's really designed to be just a quick, convenient point of payment for those that are coming in to grab lunch and really take advantage of some of those, services they provide for people on the go.
yeah, exactly right. I mean, I think eventually you might see it show up even at the point of sale at the front end.
Mm-hmm.
But for the time being, this is targeted towards the prepared food section, the coffee and gelato bar, in some of their bigger and more sophisticated stores, the bar. There are probably a half dozen potential points of installation, and it really is about giving the shoppers who are on very focused missions more convenience
Right.
on those trips.
And then we've seen retailers in the UK and across generally Europe and the US, some of them implementing these in the cafes that they have in their prepared food sections, and some of the more on-the-go sections, so that consumers don't have to walk through the entire large box that are just there for morning coffee and really positioning themselves to the convenience strip. But Square is a much more cost-effective way than installing the large checkout stations in these smaller areas in the store.
And like a lot of grocers who are generally reluctant to invest much in technology, one thing we've seen is anything that improves the checkout experience is relatively open to investment. So everything from self-checkout to things like the tunnel that accelerates checkout. None of these things are straightforward, and there's a lot of trade-offs between labor savings and efficiency and giving up impulse merchandising opportunities and shrink. But there's no question that in a format as comparatively small as Whole Foods, where congestion is always on the rise, the appeal of some kind of a mobile payment solution that saves people time is pretty interesting. And the third story is that MCX, which is the consortium of more than 25 big retailers, it's about 18 months, maybe even 24 months old, has just selected Paydiant, one of our neighbors here in Waltham, Massachusetts, as a technology partner. And it's interesting because I think most, when they saw MCX formed, thought it was really more of a defensive strategy, all about blocking Google or PayPal, really any would-be intermediary who wanted to access transactional data in retailers and disintermediate retailers as it relates to selling media and marketing opportunities but based on that transactional data, as well as attempt to reduce or eliminate the interchange fees that retailers pay to Visa and MasterCard. I mean, imagine if these retailers through ACH payments or something could eliminate the 2.5% to 3.5% transaction fees they pay on every credit transaction. Pretty big idea. But most people, when this launched, thought, this is, how many examples can you give of 25 retailer initiatives that moved quickly or resulted in a big solution? So nobody really thought it was going to go anywhere. But in the fall, they hired Deckers Davidson, who we know from Barclaycard. He's a very experienced, really well-respected executive, and that was the first sign to me that MCX might actually be making progress. And they had steadily added a lot more members over 2013 too. But now, with a well-established technology partner, Paydiant's got venture backing, and they were selected by Subway, so they're enterprise ready. It's another sign that MCX might actually be progressing on the roadmap to deployment. So it may be a year where the promise of mobile payments starts to materialize. And for a long time, it's really been about trying to persuade consumers that mobile is a more convenient way to pay than cash or card. And I think most would have told you it's not more convenient. But now that there's some security issues, and now that there are technologies that really are faster, I think it's going to be an interesting year to watch for payments. Mary, Alibaba's launching in the U.S. What do we know about that?
So there's a couple big investments coming in commerce in the U.S. Alibaba is one of the largest online retailers. It's based in China, which makes it have a huge access to population in there. It's really focused on a lot of consumer to consumer and more of a platform for brands and retailers to sell their goods to consumers in China. It doesn't handle as much side as the logistics as you expect in Amazon having that huge fulfillment center build out, but it's really positioned itself as this major platform that can connect consumers to goods, either from brands, retailers, other consumers in the country, and it's gained a lot of traction. It's built a lot of infrastructures there, like Alipay, its payment system, to ensure secure payments and build trust in the network, and building out platforms, as Amazon does through web services for a couple other technology companies out there. But it's now actually entering the US. It is launching 11 Main, which is sort of an eBay-esque site here. We've also heard that it's been contacting some of the best-selling market players on eBay to try to enter its more curated, brand-centric product and hand-picked assortment. So it's really trying to become the hand-picked, high-quality eBay in America. It's going to probably have a little of an uphill battle, given that it's brand new here and it doesn't carry the same name recognition that it does in other parts of the world. But it's one of the companies that's growing so quickly, and we have such a large presence in Asia that it's going to be pretty interesting how it grows and expands globally. As we've known, Amazon's had a little bit of struggle as it expands to new markets. It's struggling against Alibaba and gaining traction in China. It's had some troubles in countries like Japan, facing another established player, Rakuten, who's also entered the US through Buy.com. So there's a couple of these global major e-commerce players that are now crossing a lot more territory than we've seen in the past.
Yeah, you mentioned Amazon struggles internationally. There's sort of these three pure play online retailers, Alibaba, Amazon, and Rakuten, that are all dominant in their home markets and have expanded internationally, but really seem to be struggling to adapt their headquarter model to some of the international markets that they enter. And Amazon's challenges in China and even Japan and parts of Europe and some of the other international markets have been relatively well documented. But even in the UK, their sales growth just decelerated to overall e-commerce market growth rates, which is lower than in the US, where they tend to grow at 1.5 or 2x the overall e-commerce landscape. And I think it'll be really important to watch Alibaba expand to the US, but it probably won't be straightforward, because everything about the model that works for them in Asia, the sources of traffic, the way that the economics are structured between both consumers and their suppliers, and certainly the very different logistics landscape, the population density, the cost of labor and delivery. I just suspect it's going to be an interesting journey for them, as it has been for other retailers that try to go outside their headquarter market, but still really important.
Yeah, so just to be clear, so Alibaba's launching, is it just a C2C platform here in the US, or are they going some B2C as well?
It is B2C, but it's a sort of invitation-only marketplace for professional merchants to sell to consumers. So it's not B2B the way that Alibaba largely is in China, where it's businesses acquiring their supplies from other businesses. It's more of a professionally managed, curated marketplace of merchants. So if you took Amazon's third-party marketplace as an example, but only opened it to screened and vetted sellers who had some brand awareness and maybe buying power. We have no idea really what 11 Main's criteria are, but they're trying to build a curated marketplace and share some of the risk of inventory management with the third-party merchants.
Mm-hmm.
But it doesn't sound like they're trying to be as totally platform-driven and open-ended as an eBay
Right.
or an Amazon is. Is that right? Is that
Yep.
accurate?
That sounds right to me. It's going to be an interesting one to watch for sure, just because it seems like a slightly big departure from how they're operating in China currently, and how logistics here is so much more important. Amazon's trained the consumers to expect that very fast 2-day delivery for Prime members. And considering the delivery fees and structures in China, less delivery time is expected, and it's much lower labor models, as well as even the payment structure is so different. Most of their payments are either through their own payment system, Alipay, or cash on delivery. So they've built an entire infrastructure from search to chat to payments to web hosting in China, and they're entering a new market where they don't have that large presence and infrastructure set up.
You know, you did just remind me, Alibaba led a $200 million investment in ShopRunner
Yep, they
in the
did.
US. And so ShopRunner has been around for a few years. It was originally conceived as a broad-based competitor to Amazon Prime. So it was a service that enlisted a lot of online retailers, many of which were specialty retailers, so like GNC and Toys R Us and others, and it made an offer to the consumer that was $79 for free 2-day shipping. So it sounded a lot like Amazon Prime, with the exception that there was actually no logistical capability behind ShopRunner. So each individual retailer was responsible for using its own fulfillment model to get the product to consumers. And as you probably realize, very few of them can actually get product to consumers in 2 days as Amazon can. So the free 2-day shipping ended up actually being, it will leave our warehouse in 2 days, as opposed to it'll be on your doorstep in 2 days. So ShopRunner was something I had dismissed a long time ago as being a clever marketing trick that really never got much traction outside of with some retailers who may or may not have been disillusioned with it. But that $200 million investment, I have to believe, is going to be deployed to build some logistical infrastructure. So you do start to see that Alibaba is piecing together the elements of a significant presence in the U.S., and it's definitely going to be important to pay attention to how that plays out.
Mm-hmm.
Well, I should have thought of this Whole Foods story when we were still talking about Whole Foods and Square, but Mike, didn't Whole Foods have an announcement this week?
They did. So Whole Foods just lowered their forecast for the year following disappointing Q1 that came in just below Wall Street expectations. And really what they did is they lowered their top end of projections. So they kept same-store sales are still projected to grow right now 5.5% to 6.2% this year, which they had projected 5.5% to 7% same-store sales growth, which is still down from their traditional growth of around 8 or plus percent.
Sure.
That they've been accustomed to over the last 3 years or so. And really what we're seeing is just it's due to just increased competition in that natural, organic, higher differentiation space in grocery, which has really been held up over the last, again, 3 years or so as a growth sector within the industry. And what's happened, Whole Foods was kind of the pioneer. Wegmans has been around for a long time, but Whole Foods really took it to the next step and is the biggest natural and organic grocer in the U.S. But you're seeing over the last couple years a lot of new players emerge. Regional right now mainly in focus, but expanding pretty rapidly across the country. You talk about Sprouts Farmers Market, you talk about the Fresh Market, and a few others. Even, you look at traditional grocers, Kroger expanding their natural and organic range is a great example as well. Really, the grocery space is understanding that in order to win in this new marketplace, you either have to get to being a low-cost operator, more in line with your Walmarts and your discounters, or you really need to premiumize the offer in your stores to play in with the trends that we're seeing from shoppers.
And Mary and I last fall did a pretty major study of the U.S. grocery landscape, and what we concluded is exactly what you just said. All of the growth is sort of fragmented between the high end and the low end. And what seems increasingly clear is that we're not the only ones that realize that. The retailers have realized that.
Mm-hmm.
And so you see a lot of segmentation within the big mainstream grocers and we expect you'll probably see more of that. But what's interesting is at the high end, as more players are jumping in, all of the players seem to be struggling a bit more. I mean, just over the last week or two, the fresh market, I think, had their stock hammered because expanding as they've marched further and further west has been harder and harder. And I think they see the growth potential, as others do, and they're trying to invest quickly. But now that this is a relatively clear hot segment of the market and the competition is intensifying, everybody is facing more significant headwinds.
Right. It's not so that, you can have some of these smaller players just kind of hide under the radar anymore and expand. All the big guys kind of recognize now that, this little niche segment has been eating away at their sales for a number of years now and are going after it in a more aggressive way that's really, starting to pressure some of these smaller operators' expansion plans. We still expect it. It's still growing. If you're talking total U.S. grocery market, this is still an area where you're going to see 2x growth versus your mainstream retailers. But there are starting to be some pretty clear winners and losers as the competition increases in this space.
Yeah, and I suspect it'll be another 18-month period where there's a lot of regeneration and store innovation and attempts to reposition to go both up market and down market, sometimes with lightly modified store formats, different assortments, different pricing, certainly different price communication, but I'm sure we're going to see some interesting new formats over the next year.
Yeah, and really what we're seeing is this, and this isn't a new trend, but it's been steadily gaining traction as it just continues to pressure the traditional center store. When you think about the grocers who now recognize these new formats, for those of you that aren't familiar with Sprouts, this is a great example to go take a look at that's completely redesigned what a grocery store can look like, where there basically is no center store within their offering. And now the big grocers all recognize that, in order to maintain, they have to continue to expand these traditional perimeter sections and give them more space, which is just sort of changing the format of what a traditional grocer looks like these days.
Yeah, absolutely. Well, Mary, you've got our last story. Home Depot is investing a little bit more in e-commerce, it sounds like.
Yep, so a lot of the major retailers established in the U.S. are also investing in e-commerce. So we've seen Home Depot open their first dedicated fulfillment center. They're expected to open 3 more this year, or 2 more. It's the first of 3 this year. So this comes on the tails of Walmart opening 2 more fulfillment centers dedicated to e-commerce. And we just see this becoming a pretty decent trend expanding in the landscape because, as many have noticed from Amazon, picking for e-commerce orders out of a distribution center is very difficult. Distribution centers are organized to distribute goods to stores with full pallet loads and really not optimized for the eaches that home delivery demands. So as they continue to invest in this infrastructure, we can see their capabilities in fulfilling orders faster and more accurately really go up. But it's also going to be a little of a rocky road in terms of figuring out that supply chain, and especially even for vendors. So if your orders for e-commerce go into this new fulfillment center and it's going to become a separate order in some cases, it can have huge implications on the vendor supply chain where they're used to sending pallets. And then for these new .com fulfillment centers, they're going to be asked for caseloads, half pallets, split packs. So figuring out how to justify that supply chain issues with the smaller quantities is going to cause some interesting issues going forward.
Yeah. I mean, there's some upside in the sense that you might be able to list SKUs with retailers who have expanded fulfillment center capacity that aren't even in brick and mortar distribution. But you're exactly right. There's definitely added supply chain complexity, and order minimums may be smaller for the other facility, and it certainly brings complexity. Well, that does it for this week. I'm excited next week to be speaking with Fresh Direct. We're still doing a huge update of our U.S. online grocery landscape review, and heard a lot from Peapod last week. We'll be hearing again from Fresh Direct next week. So that's exciting. Mike, what do you have coming up?
Well, we have some big news coming up on our analytics portal. So as everyone and all of our users know out there, we give really robust forecasts for not only retail sales, but also the larger macro database. And we're doing our quarterly update of our larger macro data. So you'll see updated GDP, population, all of those big metrics that really drive where the future of retail is going. You'll see all of those updated on our site coming over next week.
Yeah, that's awesome.
Mhm.
Mary, what about you?
Heading out to see some new technology companies. So we're going, based in Boston, we're nice and close to MIT. So we're going over to that area to visit BiteLight, as we've seen some of the micro in-store location companies, and really driven by one iBeacon, and then a lot of other companies are participating in this area, are really able to contact consumers while they're in the store in a much more passive and interactive way. So it's a huge opportunity for brands to be able to reach their consumers while they're in the store, while they're in the aisle, knowing a few things about them, so you can really target the right person at the right time. So this is another company that's playing in that area that is going to be very interesting to go see and continue to learn about, to give out to our wider customer base.
I hope I can join you there.
Mhm.
That one sounds interesting. Well, thanks, Mary. Thanks, Michael. Thanks to everybody for joining us. Have a great weekend. Happy Valentine's Day. We love you.